What can I say, boys and girls? I've had a good day today, good start to the week. I've actually done closer to $8,000 today. That's one of my funded accounts plus my personal account, which is where I made the $5,700. I took 3 trades in total. 2 of them were fantastic. One of them was a bit messy, but I'll break down the reasoning for each trade, why I entered, why I exited, and this is all within the framework of the volume profile. If you're new here, I almost exclusively trade using the volume profile, and my trading style is more that of a scalper or a very short-term trader. So here's the first trade. This is the 1 minute chart on the S&P 500 futures. I'm trading the ES at the moment, and I always trade off of the 1 minute chart. This trade was taken at about 7:48 p.m. on Sunday. So this is overnight before the Monday open. I'm going to point out 2 key things which caused me to enter this trade. The first thing is, notice the shape of the profile here. Normally a volume profile in most instances will look more like this. You have your profile, but then it will look more like this. Bit more jagged, a little bit more defined, right? You got some more clear high volume levels like this. You can see obviously the stark difference between a typical profile versus today, and this is what we call a D, a capital D shaped profile. And what the D-shaped profile represents is that the range that we're trading in up to the point of when I took my trade, so if we take that back to the exact point I entered the trade, that's how the profile looked when I entered. What a D-shaped profile like this represents is a balanced price range. So based on the volume we can see that price is transacting at a pretty even level across the range. So we're not getting specific price points that are of a lot more interest compared to other price points. The market is liking this whole range. It's balanced and reasonably fair value up and down this range. And in situations like this, rather than playing what the typical play would be, which would be playing a high volume node or playing the point of control, and by playing I mean getting your entries around those points, the better approach is to take an entry or take a trade from the extremes of the volume profile, the extremes, the edges of the value area. And you can see that even before my trade, you can see those extremes playing out on both sides. Even down here, it was bought back up from the lows, then it sold here where I got my entry, came back up, sold there, came back down, bought there, sold here again before eventually running away. But while the markets were in balance here, the higher probability play is often to fade the extremes of the range. So that's how you can use a volume profile to determine if the markets are in fact ranging or if it's developing interest towards the upper end or lower end and is about to break out. The volume profile can help you to identify what type of approach to take. So seeing that D-shaped profile, we pushed out away from the value area high of the developing profile. As soon as we broke back in, I got short at 49.20. My stop loss was very, very tight. I actually only had my stop loss at this high right here, the high that made the breakout from the value high. Taking profit at a 1-to-1, 4910.5, just at this swing low right here. And the crazy thing is, because of the volatility in the Trump tariffs, the range of the S&P has been insane. This is overnight. To see a 10-point range look so small on the chart is unusual for the S&P. So there's been a lot of opportunity here during this more volatile time. And you can see if you were in fact ballsy enough to hold that trade longer, that ran all the way down to point of control before bouncing back up again, which, it could have been a 28-point move from fading that value high. That's not my style. I like to get in, get out, high probability moves with a very small window of exposure to the market. That's my personal style. So I was in and I was out fairly quick for my first $1,000 on that trade for the day. So the second trade here, this is where the profile had developed to the time of my second trade. You can see the current session developing point of control was right here, and that's where I initially got the first 2 contracts on my position at 4931 as we were kind of bouncing from point of control. Now, the reason why this trade I feel like was less quality compared to my last one is because I actually ended up using a wider stop loss than I normally would on this trade. So I got in at 4931 with the first 2 contracts, right? With my take profit target at 4945. The reason being is that is the edge of an opposing high volume node just above near the value highs, right? And that's where price actually ended up reversing from. So it was a good take profit target. That part I'm very happy with. However, the part I'm not so happy with in this trade is that my stop loss was a bit wider than I would have liked. I actually used a negative risk to reward ratio on this trade and got very close to being stopped out. So I'm not entirely happy with this trade. You guys know I tag my trades in my journal with a rating. The second trade I would rank a C rank. Ideally, I don't want to take too much negative R trades. The reason I put on negative R on this is because if you look at the volume profile here, right below the point of control, we have a pretty strong high volume node sitting just underneath point of control. And the point of control price is actually quite thin. See the node here? It's quite a thin price right across here. Although I entered on this small bounce from point of control the first time, I was ready and prepared for price to pull back below to test this high volume node if we broke through this shelf here at point of control. It's a very thin shelf, point of control, so breaking through that, not so difficult compared to breaking through this higher volume node resting just below point of control. So I actually have my stop loss just a few ticks away from the edge of this node. You can see price came pretty close to stopping me out on that trade. But I added one more contract in once we tapped into this high volume node, added one more contract in, lo and behold, we got that strong reaction from this high volume node, and we saw price push back up, and I exited the full position right there on the test of this upper node here near the value highs before it sold off heavily to the downside. And this is a good example of a good exit. Again, typically you don't want to be holding through these high volume nodes. You want to take at least partials, if not the whole position at an opposing high volume node, especially when the market trend is bearish and price is approaching a premium level, which is a high volume node at value area highs, which is relatively expensive pricing. It's the perfect place for sellers to come in and push price back down. A wobbly entry, took on quite a bit of risk, but then a perfect exit. Again, I rank that a C trade. Not happy with the entry in the end, but very happy with the exit. And this trade net me $2,600 on the same day. So overall, a good outcome. Looking back, initially seeing that this point of control shelf was quite thin, the better move would have been just to wait to see if price pulls back down into the node just below and get my entry there. But hindsight's 2020, but I can learn from that by being more disciplined with my entry next time. And the last trade I took during the New York session. This was a very simple node-to-node trade. So if we pull the volume profile back to the time of my entry here, I'll tell you the context of this short. So you can see I got short and covered my position down here at this low. Coincidentally happened to be the low of this price movement, and I'll show you why. So what you can see, the red line here represents point of control, and you can see right before my entry, price had come down to point of control off the value highs. We'd come down off value highs, back down to point of control, broke through point of control, tried to push back up, but then failed. Once we see that fail and price broke back below point of control, that was a good sign of a short for me. So what I was looking for here was to get my entry in on the break of the area of high volume here. So we'd already broken the point of control high volume node here. We'd already broken below that. And then this area of high volume here, price initially held at, but after that failed, pushed back up, we broke back below this high volume node here now too. So that's where I got my short entry at 5076.75, which is just at the low of that high volume node is where I got short. And I'm targeting the next opposing high volume node, which was this area in the profile right here. We drag that across, and that's where I covered my position. A nice, quick, easy short. And again, an example of a great exit because that is the reversal, the point of reversal before price jumped back up to point of control. And again, finding support before pushing back up to the value area highs. So that was a really, really good trade. That one I'd class as an A trade. My entry at 5076.75. My stop loss I had just above that high volume node. And my take profit, obviously, at 5055. So that was a really nice clean trade, netting about $2,100. My total take profit for today on my personal account, just over $5,700. So a lot of good opportunities today, a lot of good trades using the volume profile. Happy with my execution. Just that second trade, I should have waited for a better entry on that one, but otherwise my exits were flawless and my entry or the other two trades were flawless. So really good trading day, great start to the week. Let me know if you guys like these educational trade walkthrough videos. Let me know if they bring you value, and let me know if you have any questions. If it did, like the video, and I'll see you guys later in the week.